Hello fellow option traders, this is Jeff. In this video we're going to talk about a possible earnings play for Apple. I'm not a big earnings play kind of person, but whenever earnings season comes around I'm always tempted to do something. And I may do something this time or I may not. But I wanted to talk about two different possibilities for Apple that I came up with. Their earnings. Today is Sunday, January 26th, and Apple's earnings are after the market closes tomorrow, Monday. So what we have here is that we can't really determine anything by price action. All we can do is possibly go back and take a look at previous earnings. Now, this one was pretty much a non-event. I mean, it gapped up the next day, and then it came down quite a bit. So it moved. We're at 529 there, ended up closing at 515. So that was only a little bit more than maybe like a 13 or 14 point move. So we can't tell anything from that particular earnings event. Here's one here where what happened here? They just barely beat, so there was a real nice positive move there. And this earnings event back here was they actually missed on this one, and they still went up. So you really never know. So what do I think is going to happen here? I think you can't do like a neutral trade where you hope that it moves enough for you to make money in either direction, because I find that you tend to have to pay a lot for those, and the return is not really all that great. So what other options do we have? Well, we're looking at the market is looking for a $14 per share earnings report here. That's pretty high. I think that being what it is, that's what they expect. But the most important thing is, what do they have in the pipeline, and what does the future look like? Because that's really what everybody pretty much hangs their hat on. If they like what they hear, we're going to shoot up. If they don't like what they hear, it's going to collapse. But either way, what usually happens is IV definitely collapses. So if we're looking at next week's expiration, IV is at 53, the following week is 43, and then 35, 34, and then it kind of hangs around the lower 30s after that, all the way out. And it's kind of surprising. Usually IV increases as expiration dates are pushed out, but it's not showing that here. The second observation here is the move, the expected move, which is in parentheses here, and that's pretty much spread across the entire board here for that expiration. So we're looking at a 30-point move. All right, so what can we do? Well, I have a couple of trades here. One is just my expectation. I think the stock is going to move down. How much it moves, I don't know, but I'm putting my money on the stock actually pulling back a little bit. So we're looking at a 30-point move. So I picked current stock price is 546. I picked a put at 510, and it's only $3, so that's just like a $300 bet. And I also picked a debit spread at $2.63, and that is at 550 and 545, just slightly out of the money at this time. So let's take a look at those two on the risk profile. All right, so here we have the current price, and I have these price lines here. They're called price slices at about that $30 move, approximately. So we can see that if it moves down $30, we're risking $300, and we could make $402. But that's only if IV stays where it's at. And this is based on the current date too. So if we click on this little wrench here, we can open up these boxes here where we can mess around with this current stock price, and we can adjust the IV. So if we do that, I'm expecting probably like a 10 point, okay, I had it wrong here. I just reset the parameters. Let's do this again. Price moves down to 514 or thereabouts, maybe like 515. And we could peg that exactly if we wanted to down here. Type that in there. Let's say it moves down to 515. And this one up here is 575. We'll make that even. Okay, so if it moves down to 515, we'll make $840. But by the same token, you can pretty much bet that IV is going to drop a good 10 points. Not 10%, but 10 percentage points. So if we're looking at IV here and we want to drop 10 from it, we drop 10, and now we're looking at possible 588. But we have to go out to Tuesday. Oops. We have to go out to Tuesday. So let's go out to Tuesday. And you can see that we are now down to about, doubling our earnings if price gets to that point. So if that happens, that would be a good trade. You risk 300, you make 385. That's not a bad deal. You would have to get out of the trade on first thing Monday morning. And if it goes that way, that's fine. If it doesn't, however, you're coughing up almost the entire $300. So you've lost everything that you've risked, and that's all the way up to here, which is 527. So if the price is 527 or higher come Tuesday morning, it's a losing trade. All right, so let's look at another possibility for about the same price. We're going to do a 550, 545 debit spread. So rather than selling a call spread, we are buying a put spread. Only because there's more premium in the puts for this particular play. Although pretty much everything all works out the same. So on this particular trade, you can see that if price, let's go back here. All right. Now we're back to Monday. Let's say Monday morning at the open. We go ahead and we jump into the spread. And here we can see that we'll make the max here is 237, and the most that we can lose is basically what we paid for the trade is 263. So we're limiting what we can make by increasing our probability of having a successful trade. So this is pretty much just a slightly out of the money put debit spread. Okay, so now what happens if we lose our 10 on IV and we move to Tuesday morning? now we can see that if price doesn't do anything, doesn't change at all, this would still be a winning trade. And we would end up with like a profit of $138. And that's our break even is now at around 547. We could make this max of $237 if we stay in the trade until when it expires. But if it moves down here to the 515 level and we get out on Tuesday morning, we made $190. I mean, this trade is not going to get you rich, but the probabilities is much higher. And there's not much movement that you would need on the stock. Even if it moves up, so let's say it moves up to the 575 here, we're still only going to lose $186. Now this is in theory, so this is, you know, a risk profile. That's not written in granite or in stone. It's more like written in the sand because these are just calculations. So I guess in summary then, if I was to do anything on Apple, I would do a directional bet, and I would do a directional bet to the downside. And I would use this particular trade or possibly a credit spread. Let's see what a credit spread looks like. Slightly out of the money. So that would be maybe here. Sell this vertical. And we want to go to 547.50. No, 552.50. Okay, so that would be pretty much a similar trade. And if you want to do a credit spread, you could do that too. I was mostly looking for something that gets me close to that 250 mark, the magic 250 mark. This one is just a hair off, but you could do a credit spread as well. And if we lose our 10% in IV and move to Tuesday morning, even if price stays the same, you're going to make a couple of dollars. I would say your profit at this point on Tuesday morning is about the same as the debit spread. And if you advance the days down here, you would only have to stay in until Thursday to get nearly 100% of your profit. And even if price continues to move up after that, it still could be profitable waiting until Friday, and then at expiration, which is really Saturday morning, this is where we would be at. Okay, so I guess you could end up doing a debit or a credit spread. Debit or credit spread, whichever one suits your fancy, I guess you might say. But I would probably do this debit spread. And we'll see what happens. I'm going to lock these in, lock them all in. And if I don't do the trade, then we'll come back and take a look at it, and I will discuss it on the daily scan for Tuesday morning, or Wednesday morning, and or Thursday morning, or Friday morning. So everybody stay warm. It's very cold here. Have a great day and happy trading.